Welcome back to XRP Spotlight, your trusted source for the latest XRP news, market analysis, and crypto developments. Today, we're taking a closer look at a fascinating update that has XRP traders paying very close attention. According to a recent analyst report, XRP may be preparing for its next major move after enduring one of its most challenging corrections of the year. The big question now is whether the asset has finally found a bottom and what exactly could trigger the next significant rally. After weeks of uncertainty, intense selling pressure, and market-wide fear, signs are beginning to emerge that XRP could be stabilizing. While the road to recovery may not be immediate, many traders believe the worst part of the decline may already be behind us. In this report, we'll break down the latest chart analysis, examine key support and resistance levels, discuss what momentum indicators are revealing, and explore what traders should be watching next as XRP attempts to regain its footing in the market. Over the past several weeks, XRP has experienced a dramatic decline that caught many investors off guard. The digital asset broke below a major support zone near the $1.30 level, a price area that had successfully held for months. Once that support failed, selling pressure accelerated rapidly, creating a wave of panic across the market. Traders rushed to exit positions, stop losses were triggered, and bearish momentum pushed XRP sharply lower. During this move, the price fell into the critical $1.05 to $1.10 range, sparking widespread concerns that even lower prices could follow. However, despite the intensity of the decline, something interesting happened once XRP reached that zone. Instead of continuing downward at the same aggressive pace, the selling began to slow. Buyers started appearing at lower levels, and the market gradually transitioned from panic selling into a period of stabilization. That shift has become one of the main reasons analysts are now questioning whether a local bottom may already be in place. When analysts examine the daily chart, one of the most important observations is what did not happen. Following the breakdown below support, bears had an opportunity to drive XRP beneath the psychologically important $1 mark. In many situations, when a major support level fails, prices continue falling aggressively as fear dominates market sentiment. Yet that has not happened so far. Despite the bearish environment, XRP has managed to hold above the $1 region, and that resilience is attracting attention. Traders understand that psychological price levels often play a major role in market behavior. The fact that sellers have been unable to force a clean break below $1 suggests that buyers remain active and willing to defend the asset at current levels. While that does not automatically signal a bullish reversal, it does indicate that downside momentum may be weakening. This inability to extend losses is one of the primary reasons some analysts believe XRP could be building a foundation for a future recovery. At the same time, it is important to understand that stabilization is not the same thing as a trend reversal. Even though XRP has stopped falling aggressively, the broader market structure remains under pressure. The asset continues to trade below several important moving averages, including the 50-day moving average near $1.24. Higher above, the 100-day and 200-day moving averages remain even more distant. These technical indicators are widely used by traders to evaluate long-term trend direction. As long as XRP remains below these levels, many analysts will continue viewing the broader trend as bearish. In other words, while the recent stabilization is encouraging, it does not yet provide confirmation that a sustained bull market has begun. The market still needs to prove that buyers can regain control and push the price above key resistance zones before a more optimistic outlook can be justified. One of the more encouraging developments comes from momentum indicators. During the recent sell-off, XRP's relative strength index, commonly known as the RSI, dropped into oversold territory. Historically, oversold readings often indicate that selling pressure has become excessive and that the market may be approaching a temporary exhaustion point. Recently, the RSI has begun leveling out, suggesting that the aggressive downward momentum may be losing strength. This does not guarantee an immediate rally, but it does provide evidence that the worst selling pressure could already be behind us. Many experienced traders monitor these indicators closely because they can offer valuable clues about changing market conditions. When momentum begins stabilizing after an extended decline, it often signals that buyers and sellers are reaching a new equilibrium. That process can eventually create the conditions necessary for a stronger recovery phase. Volume trends are also supporting the stabilization narrative. During the sharp decline, trading activity surged significantly as panic selling swept through the market. High volume during a sell-off often reflects forced liquidations, emotional selling, and widespread fear among investors. However, once XRP reached its recent lows, volume began declining. This shift is important because it suggests that much of the panic-driven selling may have already occurred. As selling pressure eased, the market stopped creating new lows and instead entered a consolidation phase. Analysts often look for this combination of declining volume and price stabilization when searching for signs of a potential bottom. While it is not a guarantee that the downtrend has ended, it does indicate that market participants may be finding a temporary balance after a period of extreme volatility. Looking ahead, many analysts believe the most likely short-term scenario is continued consolidation between approximately $1.05 and $1.25. Markets rarely transition directly from panic selling into powerful bull runs. More often, they spend time building a base as buyers and sellers establish a new equilibrium. This process can take days, weeks, or even months depending on broader market conditions. For XRP, a period of sideways trading may actually be a healthy development. Consolidation allows volatility to cool, weak hands to exit the market, and stronger investors to accumulate positions. If this process continues successfully, it could create the foundation needed for a more sustainable recovery later. Patience will likely be essential for traders as the market works through this phase. The first major challenge for XRP bulls remains the former support zone near $1.30. Before the recent breakdown, this area served as a key level of defense for buyers. Now that it has been broken, it has effectively transformed into resistance. Technical analysis often follows this pattern, where previous support becomes future resistance. If XRP can reclaim and hold above $1.30, it would represent a significant victory for buyers and potentially signal that market sentiment is beginning to improve. Such a move would suggest that the recent breakdown may have been overextended and that buyers are regaining confidence. Until that happens, however, traders should expect resistance to remain strong around this area. Beyond the $1.30 level, additional resistance zones await. The 50-day moving average currently represents another important barrier that bulls will need to overcome. Above that, the 100-day moving average presents yet another challenge. These levels are important because many institutional traders and algorithmic systems monitor them closely when making trading decisions. Breaking above one resistance level is encouraging, but reclaiming multiple moving averages would provide much stronger evidence that the trend is changing. Until XRP can achieve those milestones, analysts remain cautious about declaring a full recovery. Of course, the downside risks have not disappeared. While XRP appears to have found temporary support, the critical $1 level remains the most important line in the sand. A decisive break below this threshold would significantly weaken the stabilization thesis and potentially open the door to another wave of selling pressure. Markets often react strongly when major psychological levels fail, and that could create renewed fear among investors. This is why traders continue watching the $1 mark so closely. As long as XRP remains above it, hopes for stabilization remain intact. If that level breaks, however, the outlook could change quickly. Another reason this situation has attracted so much attention is because XRP's recent behavior differs from what many expected during the peak of the sell-off. When support collapsed near $1.30, numerous market participants anticipated a rapid move toward much lower prices. Instead, buyers emerged earlier than expected and helped prevent a deeper decline. This unexpected resilience has sparked discussions about whether large investors may be accumulating positions during periods of fear. While there is no direct evidence confirming such activity, the market's reaction at recent lows has certainly fueled speculation among traders. Investor sentiment remains mixed as the market searches for direction. Some participants view the recent stabilization as the first step toward a meaningful recovery, while others believe further downside remains possible. This division is common after major corrections because confidence typically takes time to rebuild. The market is currently balancing optimism about a potential bottom against concerns about ongoing macroeconomic uncertainty and broader crypto market weakness. Until stronger confirmation emerges, both viewpoints will likely continue influencing price action. From a broader perspective, XRP's current position highlights the importance of patience in financial markets. Significant declines often leave investors eager for immediate rebounds, but sustainable recoveries usually develop gradually. Building a strong foundation requires time, particularly after periods of intense volatility. The stabilization phase currently unfolding may not generate exciting headlines every day, but it could ultimately prove critical for the asset's longer-term prospects. Markets that rush higher without establishing solid support frequently struggle to maintain those gains. Many experienced traders are now focusing less on short-term price swings and more on structural developments within the chart. They want to see whether support levels continue holding, whether momentum indicators keep improving, and whether buyers can eventually reclaim key resistance zones. These factors will likely provide a clearer picture of XRP's future direction than any single day's price movement. By monitoring these technical signals, traders can better assess whether stabilization is evolving into a genuine recovery. As we move forward, the central question remains straightforward. Has XRP truly found its bottom, or is this simply a pause before another wave of volatility? While nobody can answer that question with certainty, the evidence currently suggests that selling pressure has eased considerably compared to earlier stages of the decline. Buyers have defended critical support, momentum indicators have stabilized, and volume patterns indicate that panic selling may have largely run its course. These developments do not guarantee higher prices, but they do provide reasons for cautious optimism. For now, XRP appears to be building a floor above recent lows, and that alone represents meaningful progress after one of the year's most aggressive sell-offs. The panic phase may be fading, but the next challenge is determining whether buyers possess enough strength to transform stabilization into a genuine recovery. The coming weeks will likely provide the answer. If key resistance levels begin falling and confidence returns to the market, XRP could finally be preparing for the next significant move that many investors have been waiting for. Until then, all eyes remain on the charts as traders closely monitor every signal that could reveal what comes next for XRP.